Hello and welcome to Tax Seminars Online. My name is Michael Stein and today I'm going to discuss some of the tax issues of the 2013 budget speech, which was delivered by the Minister of Finance on the 27th of February 2013. I want to begin by emphasizing that the budget in fact tells us very little about the tax change that will be effected in the year ahead. It traditionally covers just a tiny fraction of the amendments that will be made to the Income Tax Act and other tax acts during the year. For example, last year there were several hundred amendments to the tax law, while just a handful were mentioned in the budget documents. So today I'm going to focus just on the tax rates and how they might affect you and your business. And remember, they are just proposals, although they will certainly be passed by Parliament in the course of the current year. The rate of normal tax proposed in the budget will apply to the year of assessment commencing on the 1st of March 2013. Let's call it the 2014 tax year. The first thing is that the individual income tax rates and the personal rebates have once again been improved for taxpayers. The maximum marginal rate for individuals remains 40%, but will in the 2014 tax year be reached when taxable income exceeds 638,000 Rand, compared with the 2013 figure of 617,000 Rand. To their credit, the authorities have revised the rates of tax and rebates every year to allow for so-called fiscal drag. There are three personal tax rebates, namely the primary rebate for taxpayers aged under 65, the secondary rebate for taxpayers aged over 65, and the tertiary rebate for taxpayers aged over 75. The primary rebate has been increased from 11,440 Rand to 12,080 Rand. The secondary rebate has been increased from 6,390 Rand to 6,750 Rand, and the tertiary rebate has been increased from 2,130 Rand to 2,250 Rand. Thanks to the increases in the rebates, the tax thresholds have gone up. And by tax threshold, I mean the level of taxable income above which a taxpayer becomes liable for income tax. Thus, a person not aged over 65 years at the end of the 2014 tax year can derive a taxable income of 67,111 Rand before becoming liable to income tax. The figure goes up to 104,611 Rand for a person aged over 65 and to 117,111 Rand for one aged over 75 years. These amounts will be even greater when the basic interest exemptions are taken into account. This is because the interest that is exempt can be earned free of tax on top of that. The rate of tax to be levied on the taxable income of a trust, other than a special trust or a PBO, that is a public benefit organisation, for the 2014 tax year remains at 40%. There are two types of special trust. One is a trust created to provide for qualifying disabled persons, and the other type is a will trust created to provide for minor children. These trusts pay the same rates of tax as individuals, but do not deduct the rebates. The rate of tax for ordinary companies remains 28%. The rates of tax to be levied on the taxable income of a company that is a small business corporation are very favourable and have once again been improved. They pay nothing on the first 67,111 Rand of their taxable income, which just happens to be the level at which a person aged under 65 begins to pay income tax in the 2014 tax year. They then pay 7% on the next 297,889 Rand of taxable income, which brings their taxable income up to 365,000 Rand. This means an average rate of tax of about 5.7% on the first 365,000 Rand of their taxable income. They then pay 21% on their taxable income over 365,000 Rand and up to 550,000 Rand, and then 28% tax on their taxable income over 550,000 Rand, which is the same as any other company. Thanks to the progressive rates that they pay and the very favourable basis of taxing their first 550,000 Rand of taxable income, small business corporations pay 94,328 Rand less than an ordinary company on the first 550,000 Rand of their taxable income, which is a very nice saving. After the huge increases in the CGT inclusion rates last year, there was no talk of further adjustments this year. The maximum effective rates of tax payable on capital gains therefore remain 13.3% for natural persons and special trusts, 18.65% for companies and close corporations, 0 to 18.65% for small business corporations, 26.64% for trusts that are not special trusts, and the rates that apply to the different policyholder funds of life assurers. Given the 2014 rates of tax for companies and individuals, purely from the tax point of view, it's better to operate through a company than as a sole trader, because companies pay a flat rate of income tax of 28%, while the maximum marginal rate of tax for individuals is 40%. This means that if a company derives a taxable income of 100 Rand and pays normal tax of 28 Rand, it's left with an after-tax amount of 72 Rand. But if an individual who has other taxable income and therefore pays the maximum marginal rate of normal tax of 40% derives further taxable income of 100 Rand, he or she will pay a normal tax of 40 Rand and will be left with an after-tax amount of 60 Rand from this source. But if the individual operates through a company and wants to access the after-tax funds of the company by way of a dividend subject to the 15% dividends tax, the effective rate of the company, allowing for both normal tax at the rate of 28% and dividends tax, amounts to 38.80% or 38 Rand 80. On the other hand, the individual who works for the company may choose to take a salary for his services. The salary will be deductible by the company as expenditure incurred in the production of income and will be taxed in the shareholder's hands at his marginal rate of tax. The salary will be a more efficient method for the shareholder/employee to access the funds of the company as long as it attracts an effective rate of tax in his or her hands that is less than the rate of 38.8% that would have been payable by the parties had a dividend been withdrawn instead of a salary. The marginal rate of tax for individuals reaches this level, ignoring rebates, when his or her taxable income begins to exceed an amount of 638,601 Rand, when the marginal rate of tax on additional taxable income is 40%. But if allowance is made for the primary rebate of 12,080 Rand for persons aged under 65, the ideal salary goes up to 668,800 Rand, as long as this is the sole source of taxable income for the individual concerned. If the individual has other income, then he or she should draw a salary which will bring his total taxable income to the figure of 668,800 Rand. Any further withdrawals from the company may then be by way of dividends subject to the dividends tax, since this would then limit the effective rate of tax on these further withdrawals to 38.8%. If an individual derives a capital gain personally, 33.3% of the net capital gain is included in taxable income. The maximum effective marginal rate of tax on a capital gain of an individual is therefore 13.33%, which is a third of 40. On the other hand, a company pays normal tax at the rate of 28% on 66.6% of its net capital gains. Therefore, the effective corporate rate of tax on capital gains is 18.65%, So it's cheaper to make a capital gain in your own hands than in your company. Now let's say a company makes a capital gain of 100 Rand. As I said, the effective CGT rate is 18.65%. There is therefore 81 Rand 35 left to distribute as a cash dividend to shareholders. On this amount, the company withholds the 15% dividends tax of 12 Rand 20, making a total tax liability on the capital gain of 30 Rand and 85 cents. This compares with the maximum effective rate of 13.33% that the shareholder would pay were he or she to make the capital gain in his or her own hands. So in the company it's 30.85%. For the individual earning and making the capital gain directly, it's only 13.33% maximum. For small business corporations, the total liability, normal tax plus dividends tax, ranges from 15% to 30.85%, depending upon the size of its taxable income. The deductions and credits available for medical aid contributions and medical expenses are in a state of change. At the moment, there are two forms of relief, namely the deduction of qualifying medical expenses that is deducted in the determination of taxable income, and the medical scheme fees credit or rebate, which comes off your tax payable, just like the primary and other rebates that I mentioned earlier. And it's allowed for medical aid contributions. The amount of the medical scheme fees tax credit is determined monthly and has been increased to 242 Rand for benefits to the taxpayer alone, 484 Rand for benefits to the taxpayer and one dependent, or 484 Rand for benefits to the taxpayer and one dependent, plus 162 Rand for each additional dependent. These are monthly amounts of the rebate. Then just to complicate our lives further, a whole new complicated regime will be coming in from 1 March 2014. So that's only for next year. It's an additional medical expenses tax credit.